Friends, business promotion expenditure is under close watch of the Ministry of Finance. We have already seen under GST there are various advanced rulings for business promotion expenditure and allowability of input tax credit on such expenditure. Now in this budget, in income tax also it is proposed to impose a TDS on business promotion expenditure expended by an organization. It has far-reaching implications even in the hands of the recipients of the business promotion expenditure. In this video, we are going to discuss not only the TDS under 194R, but also its impact on the recipient and also the GST impact of such business promotion expenditure. So let us start with 194 capital R. Under section 194R, a TDS at the rate of 10% is deductible by any resident which incurs any benefit or perquisite for another person who is a resident, and such benefit or perquisite is in kind and arising out of business or profession. The TDS of 10% is tax liable on the value or aggregate value of the expenditure done in a financial year. It is not applicable in case the value or aggregate value in a financial year per person is more than 20,000 rupees. It is not applicable when the expenditure is done only in cash, but it is applicable when it is done partly in cash and partly in kind. The TDS has to be deducted before providing the perquisite or the benefit to the recipient resident. However, in case it is provided to an individual or HUF with a turnover or receipt in a financial year less than 1 crore rupees in case of business or 50 lakh rupees in case of profession, it is not applicable. Now let us get into the nitty-gritties, the issues and challenges. First and foremost, not for the deductor but from the point of view of the recipient, this would be a difficult provision to implement, as the recipient of the benefit or the perquisite shall be liable to declare the value of such benefit or perquisite in its income tax return under the head profits and gains from business and profession and pay tax on the same. The government can now track such income of such persons from their 26AS, wherein a TDS would be deductible by the provider of such benefit or perquisite. Let us understand with an example. Say for example, there is a business promotion scheme by a steel company, wherein the dealers are given a scheme that in case they procure say 1000 tons of steel in a financial year, they would be eligible for a foreign tour. Now the value of this foreign tour or the aggregate value of such foreign tours provided to such person in the course of business by such steel company shall be liable to TDS at the rate of 10% even before providing the benefit or perquisite. that is before the foreign tour starts, the TDS shall be liable to be deducted and paid to the government, and of course declared in the TDS return. Friends, mind that in my example, in this case, there is no recovery in cash at all, or even if it is partly recovered, the provision is that the TDS needs to be paid in cash. So if there is no recovery of any reimbursement at all from the dealer in this case, then this 10% on the value of the benefit of foreign tour which is given to the dealer, that needs to be actually recovered from the dealer, and a debit note or in cash needs to be raised on the dealer by the deductor. The other issue is the valuation. Now, the valuation will always be disputed by the tax authorities, not only per person but also for the entire set of people to whom this benefit or perquisite is given. Now let us take another example. Say for example, in case of a mobile phone manufacturer. The manufacturer opens up a scheme whereby a dealer who purchases X number of mobile phones shall be given few mobile sets free. In this case, there is no recovery from the dealer who is getting the mobile phones. The question is, what would be the value of the benefit or perquisite? Would it be the cost price of the mobile phone to the manufacturer, or would it be the selling price, or would it be the dealer's price? Now that is another question which needs to be answered and needs to be settled going forward. On the other hand, the dealer has to disclose this benefit in its books as a profits and gains from business or profession. Friends, the case of Dhawan by the Mumbai court needs to be considered in this case. In that case, a director was provided a benefit whereby he could take his family to the direction site which was offshore for the duration of the shooting of the film. In this case, it was held by the court that it was normal for a professional to take his family out along with him to provide best quality of services, and then section 28 clause 4 of the Income Tax Act would not be applicable. So again, this benefit or perquisites needs to be evolved over a period of time and needs to be taken on a case-to-case basis. Mind that it is not applicable. This TDS under 194 capital R is not applicable in case of B2C expenditure. Now let us take the GST angle. Very recently, in case of GRB dairies, in case of Page Industries, we have seen that the GST authorities, the advanced ruling authorities, have disallowed the input tax credit on such business promotion expenditure. So any business asset which is distributed as a business promotion expenditure, the input tax credit was disallowed on three premises. Number one, that it is a personal consumption expenditure or a gift. Number two, it is an exempt supply. And number three, it is a business asset which is disposed of without a consideration. Now, possibly with the introduction of 194 capital R, at least the GST angle should be put to rest, because the Ministry of Finance itself is claiming that it is an expenditure arising out of business and it is for furtherance of the business. This provision 194R, that is TDS on business promotion expenditure or benefit or perquisite given in the course of business, would have far-reaching implications. It is applicable from 1st July 2022. Systems need to be set in businesses to implement this, and not only the businesses but even the recipients of such business promotion expenditure, they need to put up systems so as to disclose it correctly in the income tax returns and take correct input tax credit under GST in this case. Thank you very much, and do keep looking at the channel for further videos on recent evolving issues in income tax and in GST. Thank you very much.